Oil is still trading at around $88 per barrel. At the same time, there is every reason to expect a continued rise in the prices, even above $100 per barrel. According to Janet Yellen, the United States is preparing to crack down on evasion of the price cap on Russian oil, as the mechanism may no longer be working as expected. Many traders are trying to circumvent restrictions by using third-country currencies, she noted. However, if Washington imposes new, tougher sanctions, supply could shrink significantly. After all, Russia is the world's second-largest oil exporter. Given that this issue is just under consideration, the market has not responded yet. However, the very prospect of a more extensive sanctions limits oil's downside potential, as fears of a possible supply disruptions in the Middle East due to the conflict between Israel and Hamas are ebbing. Saudi Arabia also reiterated its support for efforts by OPEC Plus to balance oil markets and measures that could bolster global growth. Moreover, the Iranian government rejected allegations that the country was involved in a Hamas attack against Israel, while the White House had no evidence that Iran assisted in the operation. According to the trading chart, Brent crude futures have been trading in the sideways range of $87 to $88.5 per barrel for 2 days now. This stagnation may persist in the market for some time, but speculators are awaiting grounds for auction. Thus, the best strategy is to trade with a view to breaking through one or another boundary of the range. Gold also remains stable as investors are waiting for further development of the Palestinian-Israeli conflict, more precisely their reaction and possible auction by other countries, including those beyond the Middle East. If other states get involved in the conflict, higher global risks will boost demand for the yellow metal as a traditional safe haven asset. If the price consolidates above the $1,865 mark, the asset will extend gains. In the meantime, the gold market is in a wait-and-see mode, and the Russian currency continues to trade at around 100 rubles per dollar. A weaker dollar across the board and a steep rise in oil prices have not yet had an impact. Considering that the ruble usually reacts to global trends in the currency market with some delay, it will most likely keep standing still for some time. Apparently, only the Bank of Russia will be able to budge the currency. However, given that the regulator stays silent, it can be assumed that it's satisfied with the ruble exchange rate. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us, and see you soon.